Real estate investing tips. Now, when you're looking to buy an income property, what type of property should you buy? A condo, townhome, or a detached home? What are the pros and cons of each? There are different tenant profiles and different returns on investment per property type. Now, the property type you buy depends on two main factors. Number one, your mortgage qualifying amount, and two, the type of investor you are. Now, I want to share one huge tip and a principle of successful real estate investing. Most people that create wealth in real estate understands the principle of the highest and best use. What this means is adding the most amount of value to your property, and this usually means owning dirt, like a detached home. As an example, if a builder came downtown and bought a city block and they built a 40-story high-rise building, they're getting the highest and best use out of that piece of land because you can't add any more value to that. However, if you bought a condo in that building, you're buying into the highest and best use. There's really not a whole lot you can add value to your condo. I mean, sure, you could renovate it maybe in 10 years time or something like that, but it's not the same. Now that we got one of the most important principles of generating wealth in real estate out of the way, let's dive into the differences between buying a condo, townhome, or a single detached home as an income property. My name is Felix Chan, realtor and mortgage broker with the Live Intercity Real Estate team here in Calgary, and we share our best tips and strategies with real estate investing, home tours, and mortgage tips. So before we get started, I want to address one of the biggest mistakes I see first-time investors make, which is they want to buy the cheapest property. Now, there's nothing wrong with buying a low-priced property, but it doesn't necessarily mean it's a great investment or the best investment. Now, if it's in the wrong neighborhood, or you attract the wrong type of tenant, or it doesn't cash flow, then you buying a cheap property doesn't actually help you. It actually hurts your bottom line, and your return on investment could be pretty poor. I mean, people buy investments to generate wealth and to make money. So if you put yourself in that situation, then why buy an investment property to begin with? Now, there is no right or wrong answer for the type of property you buy. Everyone's investment objectives are different, as well as their budget. You really have to figure out what kind of investor you are, how hands-on you want to be, and what you want to get out of the property. Is it positive monthly cash flow? Is it appreciation? And by the way, the real difference between the two is really that cash flow is guaranteed, whereas appreciation is not, because it depends on when you sell and what the market is doing at that time. I would love to hear about your guys' experience. What property types have worked out best for you? Do you have a portfolio of all condos or all detached? And how has that been working out for you? I would love to hear from you guys and what you've learned or the type of properties you guys have owned. So let me know in the comments below. Okay, let's talk about condos. Pros first. So for pros, the management of condos is pretty easy to manage yourself. Property management companies here in Calgary charge a fee of $500 to $1,000 to show the unit to multiple tenants and screen them, and charge about 10% of gross monthly rent. The budget, it is smaller, and if we're looking at budget versus location, a smaller budget can afford a better location, such as downtown. For location, downtown will always be in demand. The tenant profile. Now, if the condo is downtown, then chances are it's gonna be for a white collar worker. So there's a little bit more security when getting your rent. And for maintenance, the only thing you need to worry about is inside the walls of the condo. And the tenant profile is larger. It could be singles or couples. Cons, condo fees. They only go one way, which is up. Short-term rentals. It could be allowed now, but the condo board could not allow them in the future. Only one stream of income, because you only have one space to rent out. And I'll talk a little bit about this later on. And cash flow, it may not be positive. There is limited flexibility. So for example, if you wanted to replace the flooring, you would have to most bylaws would require you to upgrade the soundproofing and get approval of the type of flooring that you want to install. Here are some considerations. How much competition do you have if you listed it for rent? And what is your competitive advantage or moat compared to your competitors? Are there newer apartment rental buildings being built in your area? Townhomes, pretty similar with condos with a few slight differences. Now for the pros, the maintenance, again, only need to worry about the inside of the walls of the home. It's a lower cost than detached, but you can still buy in the inner city or in heavily populated areas. You do get more space and utility compared to a condo. You get a private garage. There's a good balance between price and space in a more central location. Cons. They're very similar to owning a condo since they are both condo ownership structure. Again, condo fees, they only go one way, which is up. Short-term rentals could be allowed now, but condo board might not allow them in the future. One stream of income and limited increase in value. Single detached homes. Pros. You can maximize the highest and best use, which means getting the most value and highest return on your investment. So for example, you can create 3 or 4 streams of income. So the first is you can rent out everything, right? So for example, if you had a bungalow in the inner city neighborhood, you could rent up the upstairs, the downstairs, you could rent out the detached garage as an additional stream of income. Or like one of my clients, they ended up building a second detached garage, and the mortgage payment on that was about $115, but they're renting it for $275. The second is you could completely gut it, renovate it, sell it. The other option is you could tear down and build an infill, or if you bought it in the right location, you can build 4 townhomes with legal basement suites on the bottom. You do own land versus air like a condo. You have maximum flexibility, so you're not bound by any rules or condominium bylaws. Short-term rentals, there are no rules other than your local municipality. So for example, Calgary's license is $100 per year for 4 doors. And you can charge higher rates because it can sleep more people. I like the marketability because you have a huge pool of buyers and individuals. I mean, buyers who wouldn't have been able to buy at a higher price can now buy because the rental income that they receive will help them qualify for a mortgage. Of course, if this is a legal suite. So couples, young families, multi-generational families, investors would all be interested in buying your property when it comes time to selling. Cons. Now the maintenance is one thing. I mean, exterior maintenance is gonna be your responsibility, like mowing the lawn, painting, fence, deck, roof. And there is a higher cost of acquisition and all distribution systems and exterior items like what I just mentioned. For the budget, I mean, if your budget doesn't allow for a single detached home, then I would consider a semi-detached or a duplex with a separate entrance so that you can suite it. Okay, now before I give you my take on what I think is the best property type for income properties, I want to extend our Realtors Mobile plan to you. It's for those in Alberta or BC and is basically an unlimited plan starting at $50. So if you want the link, let me know in the comments below and I will respond to it with a link. If you want bite-sized, quick, and impactful tips, then check out our Instagram, Live Inner City. We post a lot of extra things there that we don't post on YouTube. So again, that's Live Inner City. If you found this video valuable so far, we would love your support if you like the video so more people like you can see it. And feel free to subscribe if you like our content. My final thoughts. Okay guys, I mean, condos are great if you want a low cost, easy to manage investment property. It's great for all you guys from BC all the way to Ontario watching our videos. Just know that the appreciation won't grow as high as detached homes. There is more competition, so your rental ad or property must show value. Tenant incentives, privacy on a higher floor, the amenities within the building and nearby, proximity to the public transportation and the train, the location, and if it's partially finished. You want to make sure that you run the cash flow analysis because even with 20% down, you may not cash flow. Townhomes, they're not my preference for rentals because of the condo structure and I don't even consider them. But I mean, that's just me. You only get one stream of income and the upside potential is limited. Detached. Now this by far is my biggest preference for many reasons. The appreciation for detached homes have been consistent no matter what the market is doing. You get multiple streams of income, you own dirt versus air, and you have the most flexibility and control, and you can cash flow. I find that between the three property types, detached homes are most likely to cash flow. All right, guys, if you want to contact us, I just want to let you know what our process is. We're going to ask you 2 questions. 3, if you're an investor. The first one is, when was the last time you were last pre-approved? And the second question is, when exactly do you want to buy or take possession of your new home? And third, if you're inquiring about an investment property, what is the down payment that you have to buy your income property? Now, to get mortgage financing, you need at least 20% down. So when we know how much down you have, it gives us a pretty good idea of what types of property you can buy. And of course, everything starts with the numbers. We need to get you a pre-approval, or at least have a mortgage broker, and my team can do this for you guys, to do an assessment on your situation and see what you can qualify for. I mean, financing is the single factor that determines what type of property you buy and in what neighborhood. Okay, so hopefully this has helped you guys. Thank you to all of you guys who are continuing to support us on our channel here, for reaching out, asking us questions about investment properties. By the way, if you do have any extra questions, throw it in the comments. We've been sending out video responses to you guys. Thank you for watching, guys, and we will see you in the next video.